Good morning, everybody, and this is your S&P 500 day trade setups for today. So I know a lot of you have been moaning about sound, made a few adjustments. Let's see if that fixes it. Let me know in the comments whether that's better. Anyway, we're going to start off on the weekly here, and this weekly level has been tagged, but obviously we need to see a weekly close or below it, or alternatively a weekly bounce off that. So that's at 39.67. We're now sitting around 39.45, so this 39.50 area, or zone should I rather say, is the one that we still need to pay attention to, as I mentioned yesterday. So we have broken through the structure, but I see something really interesting here, and there is a trend line that we are following from last week. So there's last week's swing low, and then if you just draw your trend line along the bottom there, you'll get sort of the bottom of this, what could be a channel, could be a flag. Nothing really confirmed just yet, but it is just a consolidation phase in my opinion anyway. So let's just get down through the levels. If we get down to the 3 hour, we had the CPI come out. It was worse than what was expected. I got a bit panicky when the data came out, but essentially we sort of bounced around, and then going at the close we dropped, and at the moment we're sort of just hovering around the bottom here, just underneath this 39.50 area. This area, as I've been saying most of the week, is fairly critical. If we get a proper drop below it and then a pullback and retest, it's game on for a bigger move to the downside. Whether that's going to transpire or not is another question. If we look at the hour, confusion still reigns. Big up, big down. Two levels I gave you yesterday still very much in play. It was a half decent short off the top here, but you can see short-lived as well. Down, up, and then down again. So the confusion continues from the day before. So it's big up, big down, big up, big down, big up, big down. So we're ranging. I mean, that's the bottom line here. We are ranging. Oscillators now grouped to the downside. Could be bottom of range, could be bottom of channel, and then there's another line that you want to draw in over there. So you can see major resistance up here, and then we're in a smaller channel at the moment. So yeah, I think you don't want to be short down here. You'll be wanting to be short higher up. Look for structure, and for me at the moment, this 39.67 is pretty key. I just want to drop down to 15 minutes just to see whether we had any opportunities. As I said, I was sit on hands yesterday, and rightfully so. Nothing really brewing that's exciting me at the moment. Anyway, I think, personally, I think we're just going to continue in this channel for today as well. We're looking for jobs numbers today, or jobs data, should I rather say, coming out today. A bit more data coming out as well. We're waiting for that to happen, and then we shall see what is going to transpire. But I think everything is around inflation at the moment. Inflation has almost run away. And to put it into perspective, in 2020, when we had the drop due to COVID, in May of that year, inflation was pretty much at zero. And where we are sitting today, we are 8.3% at the moment. So in 2 years, inflation has gone up 8.3%. So you would have thought the Feds would have started adjusting it a little bit lower than when they did start. So they only really started adjusting this year. So yeah, that's also just adding to the volatility as well. So at the moment, the fear is there's going to be a lot more interest rate hikes, which is going to impact the market. So that's what the market is trading off. But remember, markets are forward-thinking or forward-looking. So as soon as they start feeling that the Fed's going to start tapering off the interest rate hikes and start looking at building the economy again, then you'll see buyers come back into the market. But when that point is another story. So from a day trading perspective, I suspect we are going to have the same kind of thing. These two levels here are the ones to watch. So it'll be 39.94 or 4,000 area. If we reject that again, you've got a good opportunity to come back down to this trend line around 39.29, 3,900, somewhere around there. If we break above this area here at 39.94, then I'd expect to move back to the top of the channel around 4,045 or 4,050 area. So that's kind of the moves that I think you have an opportunity to for today. But just look at this. Down 2.3%, up 2.3%, down 2.3%. That is confusion, and that's all on the 15-minute chart. If you look at that on the hour, it's basically fall 2.5% in 1 hour, gain 2.5% the next hour, and then the next 3 hours fall again. So pretty much the same what happened day before yesterday as well. Big down, big up, all happening very, very quickly. So not something I want to get involved in at the moment. So I'm still patiently sitting on the sides, looking at the different levels, waiting for either some support to be found at the downside, which is indicating a potential trend reversal to allow me to get in for some long-term trades to the upside. Alternatively, what I'm looking for is a rejection again of a half-decent level. And this here is a half-decent level. This level is fairly decent, but it's too close to be worrying about a trade. So I'm just going to add one more level in, which is that swing low there on the hour. You can see there was support found there as well. So pull back into 39.94 and 4,007. So around 4,000. If we reject that area again, half decent area to get short again. And what you'd be wanting to do is get in below whatever price action forms there on the 15 minutes. So you should have about a 300 point, between 250 and 300 point stop loss, and you should have a 650 point gain. So that's the trade that I can see at the moment. You want to carry on in this channel. It's either going to be off the top of the channel that you're short or in the middle. I would assume that we're going to hit the middle, come back and test this 4,000 area because it is a big round number, and then come back and test this weekly level down to the downside. From a weekly perspective, what you're looking at is 39.67. If the weekly bar can stay above that, so in other words, Thursday is another up down day, and then Friday is an up day, closing up above 4,000. You can have a massive pin bar on that. Well, not a massive pin bar, but it will have a very large tail. The body will be fairly big, but the tail will be fairly large as well, which will be a rejection of that 4,000 level, and that could excite some buyers going into the next week. Anyway, for me, it's cautious. Just be careful, sit on the sides, wait, and you should see some structure. 15-minute, 5-minute charts is probably what you want to be watching. But if it's going to do this, sort of swinging up and down above and below the moving averages, then you definitely just want to leave it alone. Okay, anyway, that's kind of my view today. I'm still confused and still sitting on the sides and waiting for some sanity to return so we can basically just start building our portfolios again. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.